Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Today I do not want to start any new discussion of some setup on the currency market since today is Friday. It will be better if we will finish the discussion that we have started on the current week, and this is dedicated to the Australian dollar. Since Australian dollar right now has reached some logical destination point, and right now it's ready for retracement. But in the beginning of the video, just a few cents on the recent Bank of England meeting and current situation on the Great British Pound. So first of all, as we said, Australian dollar, we think that could be one of the beneficiaries from the currency wars that have started recently, or better to say, have started not probably recently, but recently it becomes really obvious in the comments that we hear from the chiefs of the central banks, especially Bank of European Central Bank, Bank of Japan, Federal Reserve. So it's definitely they are watching for steps of the opponent on the easing policy. And the recent statement by the Fed will be the strategy for the Bank of Japan, I suppose, in the nearest future. That's the first point. But Australia stands an isolated continent, a separate continent. It has a really healthy level of interest rates. It's approximately 3%, so they could stand in the long journey of the rate decreasing if they will need. Australia has the self-sufficient economy with all resources and the commodities that they need. So I think that this really could be really healthy situation, and an Australian dollar could attract really a lot of investors who will purchase the assets in Australian dollars, especially for the carry traders. I think that in the nation region for the Japanese investors is really a very sweet topic to borrow in the yen, since the rates are negative, and put them in an Australian dollar. Especially, the Australian dollar could easily replace the United States dollar in this term, because Australian dollar stands in a big relation to the gold market. And as you can see, the Australian dollar moves higher and anticipate compared to United States dollar. This makes even more attractive this current situation. So in the long-term perspective. Speaking on a recent statement of Bank of England, I think that they really pleased us, because they have put the cable, the upper level, to the proper price level that really attractive for taking the short position. I can't say on the details, guys, right now where to take the short, what really is going on. But the fact that Great British Pound recently has shown not bad rally makes very attractive price level for taking the short position, because fundamentally we said that it's really not the topic even of the 2 years perspective of the rate hiking on the Great British Pound, but the Bank of England said that it's probably more probability that market will rise rates rather than they will not do this. And I think that is just the gambling. So especially in the current environment where all central banks take the steps on the easing policy, and when you do not have the real signs of the inflation in Great Britain, and when your households inside of Great Britain stands under big debt burden, in the current situation, the rise rate will be the suicide. And especially in the topics on the Brexit, because nobody knows what will happen to the British economy when the Brexit will take place. And right now, the public opinion stands mostly in this recent social researches tells that currently more Britain supports the Brexit. This advantage is not really big, but this is the fact that. So I think that it's just very soon the British pound will turn to the nosedive, and we just need right now to prepare for this and take the short position in a good place and in a good time. So now let's go back to the Australian dollar technical picture. What we have here. Recall that in the beginning of the week we said that market stands with this ABCD action. So our first target was the 618 minor target has been achieved. After that, market has moved above the 100% extension, but hasn't quite reached the 1618 target. This is where we have stopped our analysis last time. Since market has shown the breakout of this neckline, we said probably it's double bottom, so it's probably will retest it and could continue and should reach the 1618 extension. And we said that until this will happen, market hardly will turn to any meaningful retracement. And as you can see, yesterday this really has happened. So you can see market has hit the 1618 target of the ABC bottom. D extension, and this is also the weekly fib level. I will contract the chart, you will see. From that top to this low, the 618 resistance, 7650 area. It's very significant resistance. Also, guys, on the daily chart, market slightly hasn't touched the upper band, but on the weekly chart, market stands strongly overbought for the third week in a row. So, as you know, the financial markets feels really uncomfortable in overbought and oversold condition and trying to abandon it as soon as possible. As commodities could stand for a long period above the overbought. But since the Australian dollar has tight relation to the gold, and it's on the gold we saw really strong rally recently, that probably has made an impact on the standing on the Australian dollar also above the overbought for the 3 week in a row. So right now market has met the significant resistance area. So since this level coincides with the ABCD target, this creates the agreement resistance. It makes even stronger. So overall level. And by the way, guys, here we have the weekly stretch, bearish stretch pattern. So it's a combination of the fib level and weekly overbought. It suggests some bounce down. The most logical destination of this retracement in the current situation stands around the neckline, around 73.70, 73.70, 74 area. This will be not just the neckline, this will be also confluence support on the daily chart, 73.25, 73.56. It's confluence support. Also, guys, take a look, that will be the daily oversold. So when the market stands strongly overbought on the weekly, it's logical to see the market will drop to the oversold on the daily. So reaction equals to the counter reaction. It's absolutely normal action. And these guys, by the way, will be just a minor retracement. Take a look, 7360 is just 3.38 fib support from this most recent action. So this is minor bounce. Well, that's why we think that this could become the most probable destination of this possible retracement down. On the 4-hour time frame chart, we don't have any patterns yet, extended patterns. It hasn't been formed yet since market just has hit this resistance area. But we see this weekly period resistance one here, and we see here, guys, on the top the minor bearish engulfing pattern. As you can see, this finalized this moving upward action. The one thing that we could recognize here is the potential head and shoulders. So the top stands at 127 of this potential left shoulder. So if market will show retracement down, there's probably some forming of the right shoulder. In this case, we probably could get some kind of the maybe later we will get some kind of the ABCD. If we suggest the harmony in this pattern, then probably this could lead us right to the 7350. It's ABCD target, and this stands precisely at this area that we have initially suggested. So maybe market will form something else here. It's difficult to say, definitely. But right now, the only pattern that we could recognize here is this potential head and shoulders, because very typical action here. It's extension, it's probably something of that sort. Whatever pattern will be formed, we already have the Jet Napoli directional pattern as the bearish stretch. that suggest action down to the possible 73.50 area, and maybe it will be confirmed and supported by some classical pattern. As I said, on hand shoulders, maybe what else could be formed here? Maybe some else will be formed. So let's keep watching. If you would like to take the short position, well guys, I just have to warn you that you could meet the same situation as on the gold market. Recall our yesterday's conversation on the gold market, why we do not recommend to take the shorts on the gold right now, since it's extremely bullish market, and any short position, if even it will be supported by a real bearish context and real patterns, could lead you to some unpleasant consequences and unpleasant results, because market too sensitive for any bullish factor on the gold market, and trading on the short side, although it could be successful, but it will be really nervous. And the same situation in Australian dollar. Yes, we have context for taking the short, but you should think twice. Really, would you really like to take the short position in this Australian dollar market, since it has really tight relation to gold, and investors across the board watching for a good entry point on the long side. So that's why here, guys, we since we mostly take the view on the daily analysis, we mostly on Australian dollar look for good entry point on the long side of the market. That's our major task. That's why we're treating this current possible retracement as just as the tool to get the good entry point, but not as the separate isolated setup for trading. So that's our position. But as I said, I can't forbid you to trade it on the short side of the market. Besides, maybe you will succeed in this journey. So anyway, situation on the Australian dollar right now is very interesting, and I think that Australian dollar currently and in the short-term perspective and in general in the future will become the very interesting currency, since it will be very attractive, as in the short-term perspective in the relation to the gold market, as in the long-term perspective for the carry traders. That's why I think we will see a lot of setup here in the future.